Hello, everyone. Welcome. This is an NFP analysis as usual. So we are 20 minutes away from the NFP. Uh, so it's actually, it might be the most significant the most significant release of the whole year, to be honest. I mean, the particular one, the one that we're gonna see today. I can see that people are started already to join us via several channels. So NFP live analysis, ask me anything you want. Let me know if you want me to cover a specific asset. So we're 20 minutes away, as I already mentioned. I will share very, very quickly the calendar first of all with you guys, the economic calendar, just to make sure that everyone is in line with what is expected today and what it doesn't is not expected. So let me share quickly the economic calendar. So as you can see, 18 minutes away, 200,000 jobs expected in March, after the 275 that we have seen last time. Obviously, last time, what triggered the attention was the hourly wages, to be honest, and the unemployment, but mainly the average hourly earnings. So this time is expected to slow down a bit at 4.1% from the 4.3%. And the monthly reading is expected to grow a bit. So this is what is expected for the time being. Why? So let me get back to let me share also the screen. Perfect. Here we are. Okay. Here is the gold. I put the 30 minutes gold on. But before we start analyzing, welcome everyone. I knew that you were all aiming to analyze gold, and we have some stock traders as well over here. I'm gonna go through everything in a bit. Just very, very, very quick, guys. I would like firstly, so focus a bit on me. I will. So focus a bit on me. I would like firstly, since we have still time, to go through what is expected and why this is the one of the most important NFP releases so far this year. So as I wrote an article yesterday. So I wrote an article regarding NFP, what is expected, and what would be the impact on gold, dollar, yen, and dollar. I emphasize on gold, to be honest. So after such a strong data lately, the inflation, ISM services, manufacturing, a lot. We have seen that the US economy is growing. Okay, this is the tricky part. This is something that, as I keep saying and I repeat nearly every live analysis the last few weeks, is that this is other than the fact that it's making the life of the Fed tougher. Also, the fact that we have these signals, these indications for a strong US economy is postponing further the interest rate cut. Okay, so we had initially scenarios claiming that they will cut in April, then they were gonna cut in June. Now it seems that June is out of the way. The odds for a rate cut, in June is 50-50 right now. If you check the Fed Watch 2 online, you're gonna see that the implied Fed futures are suggesting that there is a decrease significantly in the odds of a rate cut in June, and it has postponed for the end of July meeting. So end of July meeting, as I can see in my Fed Watch over here, it shows a 97% chance of the Fed proceeding finally into a rate cut. Obviously, as we have seen from Fed Powell, he tried not to rule out of the table the rate cuts. However, we have seen a lot of Fed speeches this week, and they even started discussing and arguing and stating that we might don't need a 3 rate cuts, we might need less, we might need 2 or even 1. So this has caused a lot of uncertainty, okay, regarding the policy, the future policy of the Fed, and it caused a lot of safe haven demand, as you might already seen. Let me get back into the gold over here. I will get out of the 30 minutes chart and I will get back to the 4-hour or even the daily chart, just to show that this extension to the upside that we have seen, this extension of the rally that boosted to 2300 our goal, but we have seen this safe haven demand from Swiss as well. We have seen it in commodities in general. Copper is at 14 months high. Oil has seen a lot of demand as well because we have geopolitics. So on top of everything, on top of the FOMC, on top of the stronger data that indicates US growth, we have also geopolitics and the rising tension in the Middle East, with the Israel proceeding to some measures and increasing the measures because they're afraid of a possible revenge, let's say, from Tehran after what happened on Monday with the Syrian crew, with the crew in Syria. So yeah, all these cause a lot of uncertainty. Because remember, so what I'm trying to say here, guys, here, don't focus solely on the data, on the Fed, on the NFP, and what that means regarding the cuts. You need to have in mind the geopolitics, because especially as we go into the weekend, they will play a significant role on next week's performance. Why? Because Middle East remains the biggest supplier, one of the biggest suppliers, I believe the biggest supplier of oil. If all this situation escalates further and we have a direct conflict between Israel and Iran, that might mean further and tighter, basically, supply of oil. So that, along with the already tight conditions from Russia, the already tight conditions and supplies from OPEC Plus, this could boost further the oil prices. But it's not only that. A higher oil price implies to further inflationary pressure. So inflation could stay stubbornly to the upside or even get higher if we see further escalation in the Middle East. Okay, so I'm getting back to the I'm closing this parenthesis. I'm going back to the charts. I can see that you already started a lot of comments, basically. Oil, good day. Gold, NASDAQ. Okay, guys. Let me start with gold. Okay, let me start with gold because as surveys have stated, is the one that it performs. It has a very high volatility. In a case that we have a disappointing number today, basically there was a research from IMF indicating that taking as a sample the last 35 NFPs, and the research showed that gold is the one that affected and impacted, the value of gold impacted the most if the NFP disappoints. This is what the research show. Obviously, because the most of your gold traders, in the long term, there isn't a definite correlation between gold and the jobs report, okay, in the long term. But in the short term, the research has shown that gold prices more precisely tend to demonstrate a more pronounced, let's say, response to a disappointing jobs report compared to a positive one, and more precisely, and decrease 4 hours after, up to 4 hours after a data release. Okay, so obviously the theory remains the same, right? If we have a strong jobs report today, that implies to healthy economy. So that uh, should add pressure on the gold. Okay, but considering the fact that that also postpones the rate cut, okay, that could support instead today the gold. So let's wait and see. So let me, okay, so let's zoom in. This is a 30-minute chart on gold. Okay, guys, let me just put it on the captions as well, in order to be everyone to be in line with us. Gold, that's a 30 minutes chart, okay, and I'm gonna save it and show it. Perfect, you can see it, perfect. Okay, we are good to go. 30 minutes chart. We had a rally extended recover, actually nearly 70% of the losses that we have seen in the past. Actually, yesterday. Obviously, that doesn't really change the overall rally that we have seen, but let's focus on the 30 minutes chart. A lot of consolidation. Just a few minutes, actually, the last 2 hours before the data, with stochastic turning lower and RSI as well, flattening. That is basically is a confirmation of indecision. Okay, the first support of the day, as you can see from my pivot point analysis, is the 2280 territory, and the very first resistance of gold is the 2300 territory. However, just to zoom out a bit, and I'll go back to the 4-hour chart. Let me just change that. H4, perfect, H4. We have seen the asset trading. Look at that, consolidating a bit. Okay, can you see this double bottom over here? The whole week. After the 2300s territory, after these highs, we have seen consolidated, obviously, due to the anticipation of the NFP. So in a wider picture, you should keep these two levels as not historical, actually a key support and resistance level, because a break of any of the two could change the direction of the trend. Okay, obviously it's too early to tell, but these are two significant support and resistance levels. So keep an eye on that. Something that I wanted to add as well is the fact that I have spotted a sign of divergence. It's something that I included in my daily, in my analysis yesterday. Okay, so let me change it. Let me put my MACD on. Okay, sorry, MACD. Here we are. Excellent. So Excellent. Okay, let me zoom out a bit. So that was on the RSI. It seems that, okay, it's a tiny, tiny, tiny signal. For the time being, it doesn't mean anything. But if you check, this high is at 83 and this high is at 81. But during this period, so since the beginning of March up to date, our gold was in a rally. So the fact that the two peaks of the RSI show a slight decline, that could be interpreted as a slight sign of a divergence. Okay, put a note. For the time being, it doesn't mean anything. It's not confirmed, just something to have in mind in case we've seen further lower peaks on our RSI, with any divergence signals getting stronger. Okay, just a footnote, let's say. For the time being, it's not necessarily mean anything. It's just something that you can keep an eye on. Okay, we are 7 minutes away from the data. Okay. In the meantime, we can see that there is a bit of a buying pressure, but so let me keep my eyes on the news feed as well, just to be alert. Perfect. A lot of you asking about NASDAQ. That's NASDAQ. So let me also very, very quickly, as long as we're waiting as long as we're waiting the NFP, let me quickly have a quick look on the NASDAQ. In general, the stocks and the global stocks basically depreciated significantly today. So that was on all these things that I discussed with you just now: geopolitics, ahead of the NFP anticipation. Sorry. Oh, that's looking like an expanding triangle. That's very interesting. So immediate resistance, I think I put it on the Telegram earlier this morning, so we could see it finding a key resistance over here at the pivot point. So at 18,223 before another move to the downside, with the next immediate support level at 17,880. 17,880. Okay, so we might see it jumping, finding a key resistance over here before another attempt to the downside. It's a weekend. We have a lot of profit-taking condition as well. So, okay, it's that's for now. Let me quickly turn to the calendar, guys, because they will be out soon. Let me switch. Let me switch quickly. Not easy. And here we are. Okay. Refreshing a bit until the data are out. Hopefully we'll not see something extreme today. I was in the last neither up. You cannot see both my screen. I'm gonna share the whole screen because I want you to see also the reaction on NASDAQ as well. Sorry. Entire screen. Here we are. And there is some, let me zoom in. There is some selling going on NASDAQ. Where is the dollar as well? This is the dollar, a bid on dollar, significant bid on dollar. The data should be out. Come on. What's going on? Okay. Oh God. 303 new jobs. What that's supposed to mean? Obviously, that means that we will stay with a stubbornly high inflation. Unfortunately, this is indeed causing some further trouble for the for the for Mr. Powell and his colleagues. Unemployment detected, so improved. Uh, that's a massive bit, and there is a revision. Even though there is a revision lower for the NFP from last month, average hourly earnings. Slight increase over here, so that's not what is causing all this buying. Is mainly this one over here, so higher for longer interest rates, guys. That won't be a cut in June. This is what I can say. It shouldn't. We shouldn't basically see a rate cut in June for sure, and that might even postpone the rate cuts for the third, or even we might see economists starting mentioning the possibility of a rate cut in the very last quarter of the year. 303,000 new jobs. That's massive. That's massive. Absolutely a massive bit. And the reaction of the dollar, at least the initial one, it's very reasonable. Okay? It's very reasonable. Higher for longer interest rates, strong, a solid labor market indicating steady or even higher inflation, because this is calling for is another factor for inflationary pressure. So we have oil to the upside, causing inflationary pressure. We have we have strong data, not only labor market this time, not only jobs in the US, but we have seen manufacturing rising, we have seen services rising. um yeah, all these just are causing further boost, factors that they will boost the inflation in the US. And just to highlight, guys, that consider that this is let me just hide the caption. We're right now in the US dollar, 30 minutes. So this is the 30 minutes dollar. Please have in mind that everything that's going on in the US and the Fed affects all the other central banks as well. Not because they are waiting for the Fed to see what the Fed will do, just to repeat it, but because it affects their economies as well. Okay? So what can I say? A very stubbornly strong jobs. Uh, this should have changed for sure the odds for a hike, for a cut in June, for sure. But let's turn on the markets and your questions, just to see, just to go through the technicals. Um, massive bid today. Reasonable reaction for the dollar from the time being, already breached the second resistance of the day. The very next one is the 104.50 territory. So let me just present the overall picture, that's just to see, have a sense of where we are standing. Basically, this is a daily chart. Okay, this is a daily chart. We are not halfway of this year's performance, but we have returned, or dollar has returned, actually holding gains, uh, more than basically gains more than 70% of the down leg that we have seen in the very first quarter of the year. So it will be very interesting. I'm gonna zoom in on that one because I want you to keep an eye, okay, tonight on the close of on the US close, how your daily candle in the US dollar will close. Why I'm saying that? Because if this candle holds gains and close above the mid level of Wednesday's candle, that could be a morning star formation, which is a bullish pattern and could open the doors from a technical perspective, at least at 105 level or even higher at the August highs and the 105.45 and etc. But for the time being, have in mind tonight on the US close to keep a note, to put a note whether that will form a morning star formation or not. So now that was the dollar, okay? First reaction spiked. You see the bullish, you have seen the bullish crossover here in my intraday analysis, short-term analysis, with the 5 exponential moving average extended above the 9 exponential moving average. Stochastic posted another bullish crossover here and pointing further to the upside. RSI the same, and so on and so forth. I would like though to use my Heiken Ashi as well. Okay, I kind of like Heiken Ashi, especially for the dollar. Straightforward, very, 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 very helpful. So this is the Heiken Ashi candles. Okay, so obviously we need to wait 30 minutes chart. This is we need to wait for this candle to close in order to have a proper picture of the momentum, but it has already extended above Asia sessions highs. Okay, that is a tail at the bottom of this candle, so that implies that there is a lot of selling pressure as well. Sellers and buyers, there is a lot of fight. You can see that from this big tail at the top as well. So for getting some confirmation whether it will continue to the upside, we need to see how it will close, and we need to see the very next 2 candles as well. So in order to confirm, like here, whether it will continue to the upside for a while. So have in mind when you're using Heiken Ashi candles, a strong bullish signal will be if the candle does, if we have consecutive candles, but more precisely, the most important bullish signal is that we should not have a tail at the bottom of the candle. Okay, so let's move on. Sorry for that, something dropped over here. So let's move on. What's your next questions, guys? Shall we get back to the gold? Let me know. There are a lot of questions. A lot of you, a lot of people today at today's session. I'm glad. Okay, so gold. Let's get back to gold because my dear friend Wan Shuri over here saying that is flying. Flying? No. You see? Fly. Or you want it to fly. Cosmas, welcome, Cosmas. Nicole, Miss NFP because I just... Oh, no. Are you sure? Are you sure it's not your bank, dear Kavza? Have the money been deposited? If it's a bank transfer, it takes a while from the bank as well. So, gold. So, let's move on. Daily. Let's get back to the gold. Not daily. This is a 30 minutes chart. So, gold 30M. Perfect. Okay. Okay. What we are seeing over here? We've seen a pullback. But, my dear friends, I will say that this looks limited. Why? Why? Simply because, let me just zoom out so you can see that as well. It remains well above, first of all, on the bottom. Here we are. Of this double bottom that we initially discussed earlier in this live. Okay. So it's too early to tell how for any a pullback, for a reversal of the trend or something, or a return back to the 2270 territory. But uh, as you can see, okay, there is a bit of a pullback intraday in this 30 minutes chart, but it hasn't breached yet. The weird thing over here is that it hasn't breached the first support of the day. RSI is flirting with 50 territory, so touch it but not broken it. Let me just draw exactly the, so 50, here we are. You see, it touched it, it didn't broke it. The same stands for NASDAQ as well. The same sorry, for stochastic as well. This is the stochastic. Let me just make it clearer for you as well. Here we are. You see, the slope is indeed sharp, but it's keep flirting with its fast and slow line. We don't have a clear spread between the two lines. So that suggests, you see, there is not a clear gap, let's say, between the two lines, like here, a confirmed cross and a gap. So it is tested it once, twice, three times, four times. So that gives the impression that there is some support at the background. There are some buyers at the background trying to hold gold. Nonetheless, though, 2280 territory remains the first support of the day, which if that it breaks it, it could open the doors to the double bottom that I mentioned earlier, which also basically is the bottom of the week so far. Okay, so as long as we don't see the asset extending below that level, uh, and extending and breaking this double bottom, the gold is unlikely to give any signs of reversal. Okay, just zoom in further. Now you see, there was a lot of selling pressure on the announcement, quickly turned back. Still, we have 15 minutes to go. We're going to get back to the gold, but have in mind that regardless of this huge tail, if the bulls manage to get back higher the price and to close the price with a tiny body, that indicates that bulls will get back to in control. But we're gonna get back to it in a bit. Okay, the 15 minutes candle closed. The 30 minutes hasn't closed yet. And what happened over here? Huge tail. Actually, it's halfway. That would be interesting. Let's get back to it in a bit. Questions. I'm gonna go from the bottom to the top. Was by Bessa. Euro Swiss. Okay, yeah, Swiss actually is something that I keep watching the last since the last 2 weeks, basically. Swiss yen, pound Swiss. Very triggered my attention a lot. But okay, Euro Swiss. Yes, why not? It would be great if you had posted the. So Euro Swiss. Euro Swiss. Excellent. My dear friend, let's start from the daily chart because it's something that, okay, white chart because I know that you prefer it. Daily template. Daily white. Here we are. Perfect. So the rally is crystal clear. Now we are in a daily chart. Okay, so always try to see the overall picture first before you move down to your desirable time frame. So overall the trend is clear uh, to the upside. Let me just fix these indicators. Excellent. Remain to the upside, strong momentum as well, keep growing. Let's check a bit the RSI as well. Let me connect the bottom, still in an upwards rally, no indication of a pullback. So overall a strong this is triggering my attention over here just now. Nice bottom, but this is sorry. This implies that that's a bullish pattern, a definite bullish pattern. Okay, let's zoom in. Let's see what else is going on in this candle, in this asset. Sorry. Okay, 4-hour chart, well supported by the 50 exponential moving average in the 4-hour chart. Excellent. What we have over here, rebounded, okay, rebounded with the next immediate resistance level at 98 territory, not 98. Round number as well, that will be key. Round number as well. And if I'm not mistaken, that will be more than 50% of the black plummet that we have seen yesterday. So let me put my Fibonacci's on that one. Yeah. Oh, that's precise on the 50%. So that makes that level even more significant than I thought. Not 98, key resistance level, previous highs. You see that there was a lot of, let me just get rid of this. Okay, this is a nice support level indeed, but this is a key area because it was retested several times since last week. Actually, the last 5, 4, 5, 6, 7, 8, 9, 10 days in a row. Round number, 50% of the decline that we have seen yesterday, and retested several times the last 10 days. So key resistance area, even though it looks that the momentum is actually the asset is losing losing its bullish momentum. You see, we have a decline in the histogram of the MACD with that implies that that the asset might found a ceiling over here and we might see it turning lower. However, for the time being, this is a key resistance level that if it breaks, it could turn the asset another 40 to 50 pips higher and could open the doors, to the highs that we have seen on Tuesday. Let me go further down into the 1-hour chart. Okay, perfect. Oh, we have, come on, why is it doing that to me? Excellent. So boosted, return back, try to extend, a lack of momentum. The MACD, can you see that, guys? MACD is already, it is negative intraday, even though we have some buying pressure. However, is still well below zero. The signal line is below zero. suggesting that this is a very strong resistance level and we might see either further consolidation around that level. I'm afraid they are Suleiman, or a potential pullback. For the time being, we don't have an indication of a pullback. Uh, in order to have an indication of a pullback, it needs to break this latest bottom over here. This latest bottom. 30-minute chart might help a bit. Still. So keep in mind everything that I just mentioned, okay? Let me just here. Yeah, consolidation is basically the top, the concept over here, intraday. So flat flat moving averages, strong ceiling at the top, MACD 0, RSI is at 50 territory. A lot of consolidation is going on in the near term, my dear friend. However, remember everything that we discussed regarding the long term and the medium term, because it's an asset that it has been in rally for the whole year. Okay, so keep an eye on 98 territory and move further higher will open the doors not solely to 98.50, but further higher, because it will mean the further push, further rally for the euro Swiss, with the prospect of returning back to the 2022 territory. Okay, that's in the medium term though. Okay, let's move on. Next question. NASDAQ. Yes. I need to get back to NASDAQ for sure. I need to get back to NASDAQ. So we draw just before the NFP announcement, this expanding triangle, and I very quickly mention that, guys, you should keep an eye on this resistance, because we might see it kicking it and then pulling back and extending declines, because it's the end of the week as well. The data just give me further inflationary pressure. What inflationary pressure means for the stock market, mainly that high rates higher for longer. Why is that why this is bad for the stocks? Because companies, if we're in an environment of high interest rates, they have higher expenses, higher taxes, higher expenses, and that's why in such news we are seeing pressure in the stock market. Other than all the facts that we discussed earlier, geopolitics, potential oil prices further rally in the oil, and so on and so forth. So, okay, that's the NASDAQ. Still hasn't managed to breach the pivot point of the day, but key is the fact that the RSI didn't manage to return back to the 50 level. So it is what it is. It looks that there is more selling pressure than buying pressure. Okay. I don't know whether someone wants to share something with us in regards to the NASDAQ, as I can see a lot of you are asking about NASDAQ buy. It looks for the time being, Emmanuel, a limited boost. Okay, look, momentum looks weak. So what that's supposed to mean? It means that any appreciation, sorry, could find a key resistance at this area over here, the 18,200, to be precise, 30, but it might plummet back and drift it back to the bottom of the last month, more than a month, the 1800s, 18,000s, or even 17,895, which is the very first support um, at level. Oh, silver. I'm not. We are not. Yusuf, we're not giving signals. I'm not allowed to give signals. What I do is analyze the charts. I'm not giving signal. You will never hear me say buy or sell or whatever. I'm analyzing what the indicators are telling us: bullish, bearish, momentum, key support, resistance levels. Because I don't know what you're trading and which time frame you're trading with, what stop loss, what the target, and etc. We don't give signals over here. We have a signal service, which is auto chartist. So if you wish to have signals, please download auto chartist. But I'm not allowed to give signals, and I'm not doing that in the live analysis. In the live analysis, I'm analyzing the fundamentals and technicals. Any decision that you take is based on your time frame, on your risk and reward ratio, on the asset that you want to trade, and etc. Yes, yes, yes. Overall, Yusuf, indeed, gold is in the upside, and fundamentals are key support. All this uncertainty in central banks and geopolitics is providing demand to the gold. And something that I didn't mention in this live, okay, Yusuf is saying in the long term, yes, in the medium term, daily chart, weekly chart, gold and fundamentals as well, gold is well supported. So even, you see, even MACD is rising. The note that I mentioned that you should put is in regards to other side, but it's not something that you should worry right now. Okay, it's just to have a note to keep watching it. But overall, gold remains to the upside. I mean, it had an impressive rally since 2017. But if I have to focus in the very last rally, it started since June 2022, and we are at all times high right now. Gold remains in a rally. Remains in a rally because of all the reasons that we discussed earlier. Central banks, interest rate cuts, all this uncertainty that the data are showing without a clear indication when the Fed will actually cut rates, with the Middle East causing a lot of risk into the volatility into the market, with the banks purchasing a lot of gold reserves. Something I forget to mention in this live. I mentioned several times I mentioned in the previous live analysis. Central banks, if especially the Chinese central bank, has bought millions, even billions, if I'm not mistaken, of gold reserves. Purchase a lot because China is in a deflation situation. So they have proceeded with a lot of purchases of gold, and this is something that supports further the price of gold. So it's not only geopolitics, it's not only central banks, it's not only the strong data, but we have it's not only the fact that inflation that the gold is used as a tool for hedging inflation. is also the fact that Chinese bank and other central banks as well, but more precisely Chinese bank, has purchased the last few months a lot of gold reserves in order to protect the economy, um, to support the economy further. In China, there is a deflation situation. We have the property crisis. We don't have strong signals of growth anytime soon. All this has caused the significant purchase of gold from the central bank, and that's why overall I agree with you. Yes, gold remains to the upside. So, okay, that candle just closed. Let me check your chart. The chat. I don't know. It says a chat. Are you chatting between you guys? I'm confused. In YouTube, to the attendees in YouTube. Gold, gold, gold. M15 still not closed. Need to wait. And now it should be closed. It should have definitely closed. Yeah. Okay. Let me just measure out of curiosity. Remember what I said about gold and the how the candle will close? So it closed nearly halfway. Okay, nearly halfway. So this is like it's definitely a win over here. Let me just measure it again now that I'm in 30 minutes chart. 30 minutes chart of gold. The reason why I'm measuring it is just to see whether the bulls took back the control or not. So, okay, the bulls managed to take back the price uh, higher than halfway of this candle. Okay, okay, zoom out, Andrea, zoom out. RSI still at 52, MACD positive but okay, positive, but the slope is not strong, so that suggests there's still some kind of an uncertainty over here. Okay, there is still some selling going on. Let me just. But what triggers my attention is the fact that the moving averages haven't confirmed that a decline. We don't have a bearish cross of the 5 and 9 exponential moving average in this tight, really tight time frame such as the 30 minutes chart. So that is implies, guys. So you see this contradiction? Look at that. Let me just okay. Big dip, but the bulls managed to bring it back where it was 30 minutes ago. Uh, didn't manage to break the first support of the day. Moving averages didn't bearishly cross. Uh, RSI still holds above 50. Here it goes. She's 50. MACD is positive. Let me use stochastic as well, which is my near term indicator that I'm using. Flat. So it's more of a consolidation to bullish eventually, but consolidation for now, a situation rather than selling. Uh, this is consolidation. This is consolidation. Anyway, as I said, is the fact that the data came out strong is something that increased the uncertainty around the Fed. So it's Friday as well. Um, so yeah, there's no indication for a move back to the lows of the day in the 2280 or even 2270 65 territory. Yeah, for the time being is consolidation with the overall picture remainly bullish. Remaining bullish, okay? Something that could help you guys if you are short-term traders is to connect the highs and the lows of your okay, I'm using stochastic over here, but if you connect the lows and the highs, you can see that it's in a triangle. So with this way you can sorry with this way you can monitor this is a bit a pain in the ass. So yeah, this is oops. So this is something that could help the very short time frame traders to um, could alert you regarding the momentum. What I'm trying to say that by connecting the highs and lows in the stochastic and move outside the triangle, let's say below the triangle, could indicate some further near-term decline, possibly to the very first support of the day or the bottom of the day. But yeah, or if it breaks higher and moves higher and breaks the triangle to the upside, that could imply to a return back to 23,000 territory and even higher. So that's just some further confirmation in the very short time frame. So as you can see, this is not helpful for the 15 minutes chart or 5 minutes chart, but okay. So let's get back. Oh, where did I leave it? Sorry, there were many there are many comments, and I'm a bit lost over here. A sharp entry for rally-based rally technique. That's interesting. Uh, Guys, okay, I have seen some comments in regard to approval of your account, deposit. The live analysis is not the ideal place over here to post to ask for help for these matters. Obviously, I will try to pass everything into our support team, but the best way is either I know that you like social media, me as well, find it easier. So that's why we have the messengers. So for anyone that is in Facebook and want to someone from the support team to help him, please click messenger and send a direct message to our company with your wallet number or account number, anything you need, just to just the guys will try downstairs to help you as soon as possible. For everyone that is in YouTube, please, guys, visit our website www.hfm.com. There is a live chat over there, live chat, and quickly tell them, guys, I'm waiting for the approval of my account, or guys, I have transferred the money but I cannot still see them in my account. For those that someone mentioned that it deposited but it takes too long, have in mind, guys, that if you did it via a bank or something, from bank to bank, I mean, there is delay. So I don't know precisely the delay, but the guys downstairs know how long each bank does for transfers. So sometimes this is the case. There are some deposit ways which are instant, but if you have a delays, usually the bank, okay? Please, for anyone that is facing such a problem, and I can see that you are in YouTube, please go to the www.agfm.com in the live support chat and check with the guys downstairs. We have a 24/5 support team. They would be more than glad to help you. Yen, yeah. Oh, wait a minute. Cosmas. Gold and silver have powerful correlation in terms of the SMT divergence on lower time frame, like about 70 to 80%. Okay. Yeah, I haven't covered today silver. In I mentioned that copper is at 14 months highs. Let me just where's my watch list? Why my watch list? Here we are, watch list. And I would like to see silver because silver appreciated significantly as well. In general, the commodities, guys. Okay, check copper, check coffee, gold, silver. Uh, just oh god, a lot of volatility over here. Let's quickly turn to the 13 minutes chart. The selling for the silver in the near term. This is a 30 minutes chart. Let me just write it down. Silver, 30 minutes. Come on. Silver, 30 minutes. Okay. Never try SMT divergence indicator, to be honest. I heard it before, but never tried, so I cannot really tell. But yeah, so we have a pullback. This is high Kanashi candles, just to warn you. 30 minutes chart. No tail, as you can see at the top of the candle. So there is a selling pressure on silver, even though you already returned and retested the low of the day. Okay, so it seems that there is further steam to the downside for silver. Um, However, what triggered my attention is the fact that the new candle is still a bit steady. Um, so that might be the end of the decline, considering the huge tail over here, because such a huge tail like this one means two things: either consolidation for a while, either a rebound. You see over here, long tail, it caused some consolidation, or reversal. So now we are on the wait and see mode on for the next 15 minutes, just to see how this candle will close. Because if it closes either dodgily or positive, that will indicate that some consolidation might be seen in this area over here, or a potential rebound. For having a potential rebound, my dear friends, you need to see, as I mentioned, a candle without any tail at the bottom, like these ones. So these two consecutive no tail, without any tail at the bottom, bullish candles imply to a rebound. Any negative candles without any tail at the top suggest bearish signal. Okay. Okay. What we have over here? So basically, we have higher highs. Oh, oh, very interesting. Look at that. By connecting the lows since Wednesday, I have an ascending, oh, sorry, an ascending head and shoulder formation, or it looks like one basically. So with a neckline in an incline. Okay, but it doesn't look like it's gonna get back to this bottom or even break the neckline yet. But it's just something that we might focus in the future. So sorry for that. Just very quickly. So yeah, regards to the silver, my dear friend, that is a pullback, as you can see in the 30 minutes chart. However, it doesn't look that it looks limited. Return actually over here right now. We need confirmation, and basically we are 13 minutes before this candle close. But if I zoom into the 30 to 15 minutes chart, you can see that it already started rising. So yeah, we just need confirmation. We need candles without any tail at the bottom in order to confirm that we have a rebound. Are you struggling to deposit, or you have deposited but you haven't seen them in your account? I don't quite understand. Or are you struggling? I mean, is it a third party website situation that you might using for depositing? The support team is your friend, okay? Please either go to the messenger, since you're in Facebook messenger, and text quickly your and you need help with the wallet number, um, or visit the live chat, okay? A training robot. Basically, there are a lot of expert advisors that you can use over here, or that already plugged in into the platform. Or there is the libraries as well, which you can find a lot of expert advisors. But as you can see, some of these are very, very expensive. There are a lot of ones also online. If you want to use a trading robot, I'm afraid I cannot let you know which one. Uh, but by check the reviews, check whether you can afford it first of all, because some of them are quite expensive. But yeah, just go through first of all. There is over here. You can see how it works, how you can use an expert advisor. Uh, but yeah, I cannot help further, I'm afraid. USA Neongan. Check the reviews. Maybe you can check the reviews as well. Some of them are a bit expensive, some of them are cheap, some are a bit expensive. Yeah, so let me get back to the chart. So gold. Woohoo! Gold is back higher again. So that was pretty much it, the selling, it seems, of the day. Went back to the pivot point and remains within this range for 3.5 hours now, consolidating. Yeah, definitely dollar yen. Let's see dollar yen. So where we're standing. So let me just okay, perfect. So just I'll start with the daily chart, guys, okay? Because I would like to focus on the fact that first of all, these in general is looks to be, or at least, an order block. Okay, so a ranging market basically, a range in which you should keep an eye on the highs and the lows, on any break of 152 or any break of the 150 level, to be more precise, or 50, let's 50, 150, 80 level, because a pullback below outside this range and decline below this change could indicate the start of a strong reversal for the dollar yen, considering intervention signals, considering the any additional rate hike from the Bank of Japan. So the dollar yen basically right now is in a sideways mode for more than 15, 20, for more than a month, nearly a month, sorry, because because Bank of Japan hike and is expected to hike again, because there are a lot of concerns around the market and comments from central banks as well regarding intervention of the yen. So confirmation from the central bank and the government that they will intervene into support the yen, it will turn the dollar yen down like back in the 2000, where is it, 2022. In 2022 there was a consolidation for 3 days, for 3 weeks in a row. Here you are, for 3 weeks in a row, until the bank intervened, causing a decline of the dollar yen down to 125 level. This is why we're seeing all this consolidation with the asset unable to break that level, which is the ceiling for 2 years now, because of the fear of intervention and because of an additional expectation for an additional rate hike, no cut, from the Bank of Japan, who finally went out from the negative interest rates and changed its stance from ultra accommodative into yeah stop this ultra accommodative stance. This is the reason why we is consolidating and why it looks that there won't be any further boost to the upside. If for any reason, we've seen some demand and we see the asset breaking 152, the bank, actually not the Bank of Japan, it was a former top currency diplomat from Japan, has stated that if dollar again reach 155 level, the government will intervene. That's crystal clear. Okay? Have this in mind. This is the overall picture. Let's shift to the 1 hour chart. Let me get rid of the indicator, the rectangle. Here we are. Some intraday setup. perfect. What we have over here, the Bollingers are sideways, suggesting consolidation, but the moving average are keep rising. RSI holds around 80 level. Sorry, RSI is at 60 level. Stochastic hold around 80 level. So there is some support still, even though it looks overbought. It's outside Bollinger. It looks overbought, but it seems that there is still some support. However, the fact that it's overbought suggests that we might see some consolidation. Can you see that? It's overbought. RSI, however, keeps rising over here. MACD is positive. Moving average are pointing further to the upside. RSI flat. So what that means, it means that there is support for dollar yen. We might see a bit of a consolidation until it get back to the Bollinger, until it exits this overbought condition. But there is still support. So if it exits this consolidation mode, the next resistance for the asset is the ceiling of the range that we mentioned earlier, and I'm referring to the 152, or a bit closer, if you will need an immediate support, a resistance level, is the previous retests over here, the 150, 180 level, and etc. Okay. Let me just scroll down. Anything else about dollar yen, guys, before I shift to euro pound and euro Oz? Okay, euro Oz, euro Oz, euro Oz. Euro Oz, euro Oz, euro Oz, euro Oz. Here we are, my dear friend. Okay, in a decline for more than a week now, but still holds support basically over here. Nice support over here, and the very next support is down here. MACD turned negative, so there is some selling pressure still. Sorry, let me get rid of that. RSI below 40. Moving average keep pointing lower, even though these are the short-term ones. Let me use the 4-hour chart to see as well. Yeah, and Euro Oz, an increasing, bearish MACD, well below zero. RSI is pointing further to the downside, as you can see, below 50, but it keeps pointing down. For the day, there is some consolidation, but overall, there is more selling pressure than buying pressure over here. So key tonight is whether we'll manage to break that level, even though it broken it. We just check something. So the previous bottom back in the beginning of March, it was at 164.40. Broken, retested yesterday by close above it. So key tonight, dear friend, is whether today's candle will close below that 164.40. If it closes above it, that would suggest that this is still a strong support. So we might continues in consolidation or potentially rebound. But if it closes below it, okay, that could open the doors. However, we need a strong selling still. That could open the doors to 163.70 territory. Yeah, MACD and RSI are in line with this dip. So it seems that there is further room to the downside. However, confirmation can be seen if and only if we see the asset breaking this January, February, March, and up to today, this 2.5, no, two months support, 2 months bottom, 2 months bottom. Yeah. Okay. Euro, dollar, and pound dollar. We're gonna do these two. Another shot for gold as well, and we're gonna call it a day, guys, because I ran out of steam. We are an hour and 20 minutes live. Let me scan through the questions to see whether I forgot anything. We done NASDAQ, right? We done NASDAQ. I lost the count. Pound, dollar, yen, euro, dollar. Oh, you ask about NATO and Ukraine. Sorry, Jamal, I just saw this question. Can Ukraine tension in? Yes, yes, definitely yes. Not on NFP. Sorry, not on NFP. Will not have an impact on the actual data, but it could add further if Russia reacts. If it reacts with actions, not only words. If they extend, if they attack Ukraine, or if they announce some kind of actions against the countries that are part of NATO, if they proceed in some kind of economical war throughout their oil supplies. So as such, it won't affect the NFP, but it could, depending on what Russia will say. If we see any really hard comments from the Mr. Putin, or something that, I mean, like the Israel and Netanyahu last night, any comments that present that there is an escalation of the tension and the war between Russia and Ukraine, that could have an impact on the geopolitics, so that could boost further the safe haven demand, not the NFP as such, the geopolitics. Oh, there are still a lot of questions. Euro pound, euro pound, euro pound, euro pound. Okay, let's have daily chart. Interesting to see how that will close tonight, whether it's an evening star formation, which is a negative indication, which is a bearish pattern. So something food for thought for tonight and over the weekend. So euro dollar was in a dip in January, March, tried to rebound, but it managed to go halfway, if I'm not mistaken. Yes, indeed. So yeah, the fundamentals are still support pressure on euro dollar. Why? because still there is a huge gap still between the rates of ECB and the rates of the Fed. But also we have ECB next week, okay? We have ECB next week, guys. And if I'm not okay, sorry. And the expectations are that they won't really change anything. Sorry, where is the next week's? I think it's on. Is it on Tuesday? No, it's not on Tuesday. Yeah, it's on Thursday. So next Thursday we have ECB interest rate decision. It's not expected to. They don't really expect it to change rates, but uh, last time, if I'm not mistaken, Miss Lagarde suggested a rate cut that a rate cut is on the way in June. And indeed, still the scenario, the most likely scenario is that they will cut rates before the Fed. This is the central scenario so far, and that remains the case. However, and that is something that adds pressure on the euro against dollar. Not that the dollar is strong, but that the euro is weaker than the dollar. So still the scenarios for the rate cut in June, because we have inflation improved a bit, okay? Not only in general in the Eurozone, but partially, especially in the northern side. The southern side is a bit under question marks, but we've seen that growth has bottomed out, inflation improved. So still the data support a rate cut in June. And considering that the Ms. Lagarde stated that they will remain data dependent and they will closely monitor the data in order to confirm their decision. Oh, sorry, don't know what happened. Yeah, the fact that we still see a rate cut in June, while from the Fed we don't see that. This suggests a weaker euro against dollar. So, from the fundamental perspective, euro dollar implies that it might extend lower and might possibly return to the bottom of the year, which is down to the 107 level, or even lower. If we have a break at 107, this could open the doors to September's 2023 lows. Now, intraday, as you can see, remains to the downside. Two consecutive sessions lower, extending the declines that we have seen yesterday. Bearish cross from the moving average over here. Gonna get rid of that. Gonna use my fractals. Which my fractals. Here we are. Perfect. So extending lower, bearish cross in moving average, bearish cross in stochastic and keep pointing lower, negative MACD, RSI pointing further to the downside. So there is still further bearish momentum for euro dollar intraday, with the next support actually, though this is not down to here, to Tuesday's territory, 107.80. Let me just look at this. Already broken. This is already retested but not broken yet. So there is some room to the downside with this area over here, the 2nd of April range, providing the very next support levels for the asset. So yeah, that's regarding euro dollar. Pound should show a similar, pretty similar actually behavior. By the way, before we call it a date, let's use the pivot points as well. Uh, oops. Uh, colors. Oh, it's with silver and we cannot see it. Oh my god. Is it? Is this the case? Allow. The 1 hour chart. Okay, perfect. So already, yeah, that's nice. Can you see that? This is the very first support of the day from the viewpoint analysis is very close with the 261 Fibonacci expansion from my Fibonacci expansion that I used earlier, and the area that I show earlier. So next immediate support levels 107.85, 107.70, and 107.42. Okay, pound should be really similar with euro dollar, the behavior at least. um, what is pound, here we are. Yeah, intraday there is a bearish signal, bearish picture, considering the bearish cross of the moving average, which they keep pointing further to the downside. Stochastic the same, RSI the same, MACD turn negative. So there is still some room to the downside for pound, but anyway, overall also the picture is negative. There is some consolidation going on due to all this data, and considering that next week we have ECB, we have a lot of we have inflation figure from US, we have sorry, uh, so considering that we are waiting some key data next week, like the US inflation and the US inflation, and we're waiting for NFP today and all this. This is what caused this consolidation the last few days, but overall remains under pressure as well. Oh, I still have that should be hidden. It's not silver. What else, guys? I need to call it a date. I think I did Euro Aussie. Yes, I did Euro Aussie. I did gold. I did yen. I covered yen. I covered NASDAQ. I covered. What else? What else? What else? What else? What else? Oil. Okay, very quickly. Okay, oil has been to the upside, rising momentum as you can see. Rising momentum, rising RSI. All moving average pointing to the upside. Next resistance zone is at 90 level, $90 or even $91. Um, um, yeah, $90. Let me zoom in the 1 hour, in the 4 hour chart. A consolidation, a break today, anytime today above 87 could open the doors further to the upside. However, it's the end of the week, so it might continue sideways until the new week. Bullish momentum in the daily chart, bullish, neutral to bullish in the intraday time frame as well. Consolidation is the thing in the intraday basis. Say basic. So for anyone that is interested in short-term analysis, it is ranging. However, there is a lot of buying bias, bullish bias in the oil. Any anything announced from the political perspective that could cause a decline and could see the return below 85 level, 86, let's be 86, could reverse the oil lower, but or lower by meaning lower in the near term, just maybe down to 85 levels, something down to the yesterday's bottom. But yeah, overall it's still well positive uh, from a technical perspective, from a fundamental perspective as well. So a move below this range over here, a break and a move below it could open the doors down to yesterday's bottom. But uh, that's in the very short term. Overall, very well supported. You can see it from momentum, you can see it from the moving average, you can see it from the fundamentals. Nothing is calling for a reversal. It's just any pullback is just a correction because it is overbought, a correction before another attempt to the upside. Guys, I'm gonna call it a date. Thank you very much for attending. Pound Swiss, very quickly. Pound Swiss. Okay, Heiken, two consecutive Heiken ashes to the downside, but still key resistance area, support area is the 113.85 or even the bottom of the day, my dear friend. Um, if I'm not mistaken, because I was monitoring this asset, yeah, it has been in a rally, and if you connect the lows, you can see that is well supported still. Here it is, 1, 2, 3, 4, 5, 6, 7. Yeah, so any pullback in this long-term rally is just a correction before another attempt to the upside. So at this area over here, my dear friend, we might see the asset rebounding. For the timing is consolidating at this bottom. So in the long term, this looks to be a correction before another attempt to the upside. Intraday, in the 30 minutes chart or even our hour chart, we can see that it might come back to the bottom of the day, but it looks like a limited pressure, limited some profit taking condition maybe, yeah, but limited. That's it. I'm gonna call it a date. I'm gonna call it a day. Take care. Have a great day ahead and a great weekend ahead. For anyone that still has questions, guys, this is a live analysis and it will be automatically stored in YouTube channel, in the Facebook channel. So as soon as I close the session, you can get it back. You can turn your cursor and go back to check the gold analysis, to check yen analysis, etc. It will be there. Don't worry, it will stay in our channel. Thank you very much. Have a great day ahead. Take care, especially any news of the weekend. And we're gonna see you again next week with an ECB analysis, inflation live analysis as well. Thank you very much. Have a great day ahead.